So good morning everyone. It's Monday, the time of the week where we take a look at the markets and see what's in the charts and in the headlines and what is in the planning. So yeah, I think the overall picture is pretty clear. The redness of all the markets are continuing. If we just take a quick look, Europe is between 1 and a bit more and 1.2% down, with the Stock 600 even 1.24%. The US pre-market is down, Nasdaq even almost 1.6%. In the pre-market, oil is down almost a percentage. Gold is down almost a percentage. And even, the only thing really in green is the US bonds. So that's a very strong sign at the wall, and the DXY, of course. Quickly scanning the headlines, obviously the tensions in Europe and the East there are rising with the whole Russian-Ukraine situation. Stock futures slip as Wall Street tries to stabilize. Well, I don't think that's gonna succeed, and there's quite a lot of downside potential still for the stock markets. And obviously our big question is, how far will Bitcoin follow? On that point, I think if we get a bigger dump, even a bigger dump than we are now, and Bitcoin follows, we have seen time and time before that once the bottom is found and we bounce back up, Bitcoin will bounce up much faster and higher than the stock market. So something to keep in mind. And recently I saw an interview on YouTube somewhere, and I really cannot remember where somebody said a very striking thing, like, you don't buy when blood is in the streets. You wait for the paramedics to race out of the hospital to come to the aid. And the parallel there obviously is there's always more blood to be shed until the Fed starts acting on it, and when they think it's enough. So let's see what when the Fed will react, and if, and it might take quite a bit of time for that. Might even be after the summer before we see the real bottom there. So for the rest, nothing really in the headlines. Bond yields continuing up. Stocks could see more tumult in the coming week. I completely agree on that for a change. If we look at the calendar, today we don't have that much. Some minor Fed speeches tomorrow, nothing big. But on Wednesday we have the inflation figures, and it's expected that the year-on-year will go to 8.1, while previous month it was 8.5. But I do have a bit of doubts. I do fear that these numbers could be a bit worse than expected. So keep an eye open. Wednesday market open, US market open, could be a rough speech. And Thursday we also have the producers price index. That's like a bit of a leading indicator for coming inflation. That also could be a market mover there. And that's from the production company side of things. And Friday later in the afternoon, 4 p.m. European time, we got the Michigan consumer sentiment, and that's like predictive indicator for how the consumers see inflation going and how the price development. So a few quiet days on the events, and then Wednesday we could see if it either a turnaround or some sideways consolidation, or maybe even dump further, depending on the outcome of these events. I'm switching to TradingView, the app, just to see if that's any better in the responsiveness of things. So I'm just going to try switch that one over now. See if that works. I don't see the screen, and I'm guessing you the guys don't either. So let's. Oh, there we go. Yeah, it's loaded. If you don't see the screen, just let me know in the chat, please. So, what is pumping? We've seen it. It's the DXY. It broke the major historical levels from so far back. I think 2 decades long of history before you have to go. Like we had the peak in beginning of 2020, and we broke all those 2 highs, the last 2 major highs on the highest time frames. It tried to push back down, and it got instantly pushed back up. So clear rejection, clear support on these previous highs, and it's now trying to grind a bit up, with today already 1/3 of a percentage, 350 base points up, and looks to be more upside potential. So there's not really any way to look where it will end up. The only thing when you're in these sky high territories, what you can do is do some predictions based on Fibonacci's. And if we look on that, I think the next stop really for is 100, almost the 105% there. After that 106, but the real target in my opinion for the coming month is probably the 107.5, 108ish zone, this extension level. Let me mark that out for future reference. I think this will be a major zone of resistance and where it might go, and this will probably be an in-between stop test level. So still no signs of reversal anywhere on DXY. It's still looking, I still expect it to go towards the 108ish levels. So let's see how that develops. But obviously everything that's measured as USD in the denominator, like BTC, USD, stock markets, gold, everything, doesn't benefit from the DXY pumping like that. Nasdaq detail we get into in another chart, but we do see that the correlation is slowly dropping, and it will be interesting to see after when the weekend numbers have been released, when the markets open, how that will happen. Based on pre-market, we are at 88% correlation, so it seems Bitcoin is slowly starting to correlate a bit less with Nasdaq, but still it's really, really high, obviously. Gold still in quite a bit of a pullback. It almost did in 786 locally, and it seems that from the higher time frame Fibonacci we made a bullish 50%, and so far it was holding, but we see now with the markets opening that we're still exactly on that level. So maybe we make a double bottom, even hit that 786 retrace before some continuation upwards. I'd wait to see what happens around be around 1844-ish if we get there. If we break clear candle close above the Fibonacci golden pocket, then around 1890, I think it's good to expect we might retest that 2K again. Long term still looks good. Midterm still looking to hit that 2K again. Short term we might have a bit of a pullback before trying again. All in all, as long as we don't break below 1780, then we still are making a higher low on the significant daily time level. So looking good, bit of a pullback, no problem there. It always happens with gold. So long term and midterm still looking good. We do see currently that we have the trend profit reversal being signed, and we're now just waiting for the price confirmation here on top, where we want these to turn orange and these dots to cross the line with the dots to cross over the non-dotted line as price action confirmation. And I think if we break that 1890s number, we will get that price confirmation. That's something I'm looking forward to trade, some leveraged gold. And then, yeah, Bitcoin, we broke very major support yesterday in the weekend. We broke through the bottom of this long-term upwards channel. It might be a fake out, but then we should see a bounce back to those 35-36Ks really soon, like today, tomorrow. We should pivot here. We are in the support zone from January lows. If we break that, there's a pretty steep drop to pretty much 30K. I don't see any major levels in between. Maybe somewhere around 32-ish. There might be a bit of a reaction, but looking at the major levels, that 28,600 to 30K is the last major line in the sand for Bitcoin on the higher time frames. On the midterm time frames, we did break the major support there, and we instantly went pretty much to the bottom of this support. We did not break the January low yet, so, but again, with how the stock markets look today and the whole macroeconomic situation, it would really surprise me if we didn't hit that 30K. And I've been checking some sell walls and buy walls and order books, and there is a lot of support around 30K. So if 30K will break, it will need very big stock market crash, then it will probably fall through. But even if we get there, I do think we get a very decent bounce on that 30K. So I'll definitely will be putting some buy orders at that level. And I think the biggest buyable was around 30,050 USD. So I'm definitely looking to buy the expected relief rally here if we hit that 30K. But always having a hawkish eye on the stock markets. If it's like a crazy crash, we might fall straight through. And after that, it becomes quite tricky. Then after that, we have some support around that 22 to 2400 zone, and then we will, after that it's 20K, when the 19 to 20K where the big support is. So we really don't want to, 26K maybe a bit, but we really don't want to fall through that floor on these major time levels. So that high time frame BTC dominance just floating around the moving average, up and down a bit. And there's no surprise that altcoins keep getting destroyed most of the times. Ethereum to Bitcoin, it's hanging on. It's not doing that bad. We didn't hit the bottom line yet. So I think Ethereum is holding up pretty strong there, definitely, especially compared to other altcoins. Hedging, we do see the long positions increasing less fast than the short positions. So I do think on the Bitfinex whales there's still a lot of hedging going on, like people doing 1x long and a 1x short simultaneously, so no matter what direction you go, you don't win anything, you don't lose anything. So, like I said last week, it seems like they're hedging, they're continuing to do that. So not much to be said, and obviously there are more short positions because short is the profitable direction of trades for quite a while. But don't think this increase in longs means bottom yet. It looks like more hedging to me. Good thing is we don't have a huge spike in short positions like we did have before, because that was really nasty buildup of shorts there. Total market cap, yeah, it got destroyed pretty much. We lost a lot of value again, and we do have some harmonic entries, but with these conditions it needs a lot of work for it to bounce, and we are pretty much at the critical support already of the $1.5 trillion. And I think obviously Bitcoin has a lot of value loss there, but if you look at DeFi market cap, that's just ugly. See if I can, oh, not DeFi cap, obviously, total DeFi. You see that the DeFi space has already dropped through critical support there, and it's been on the lowest point since August 21, and I do expect that to drop quite a lot more if the market doesn't turn around here. So that was the fundamental charts. Let's take a peek at the stock market. Yeah, sorry Peek, I couldn't make that. Looking at the stock markets, these are the futures pretty much going down, and let's zoom this in a bit, take it one by one. So far the S&P 500 is finding a bit of support on that May 2nd. The low of Dow Jones was already a bit past the May 2nd low, so it's making already a small lower low, but the Nasdaq is falling through that levels pretty fastly. It's already 1.5% in the red. So no hope yet. I think there's a lot of downside potential for the stock markets, and we went into a bit more detail in last week MMAs, and these targets still stand, so won't be surprised if we fall to even pre-COVID level, the COVID crash levels of March, but 10k would be the logical next stop. So that would mean a 20% drop. If it really goes sideways, the COVID, it's almost 40%, 45% drop. So don't see that happening yet on the shorter time frames, but 15-20% down is very, very likely in my opinion. Like if you take the Fibonacci from the March low to the Previous highs around here. We haven't even did a 50% retrace yet. That 50% sits around 11,600, and the golden pocket is right at that, just above that 10k mark. So that is definitely my target. 10k, 9k, 8k is probably in just steps down like that. And we do see on the daily time frame that we are continuing down. We have the price confirmation, we have the early warning signs here that momentum is going against the price action, and momentum is going downwards, price action is going up. I mean momentum is going against relative strength, and usually momentum wins there. So not looking too good. Just quickly switching Nasdaq to the 3-day. We are getting an 8, so that means 9, 10, 11. So this whole week we are in a potential reverse zone on the 3-day. So we might dump a couple of days, get a bit of a relief rally, maybe after Wednesday if the figures are good. If not, we just could continue down. Like on the weekly, we had this lovely reaction here where we had the count 9 potential reverse zone. We saw a sharp increase in the trend momentum with the bump up. Never really got very good price confirmation here for long, but that is against the trend, so I wouldn't do that anyway. But a solid continuation down now again, and on the weekly we still have 5, 6, 7, 8, 9. And then potential reverse zone goes into the summer holiday. So on the weekly chart, I think there is downside potential until after the summer holidays there, with some in-between rallies up. Will probably be something like that on its way down, like we already seen here. One bump, second bump, next bump, next bump, but still continuing to make lower lows and lower highs there. There is a bit of an argument, obviously, for a descending wedge, but it's not really that clean yet. But if we consider this a bit of a fake out, and we take that from there, then we could be at a bit of a bottom of a falling wedge pretty soon around here, but it's still very big white space here, and only 1, 2, 3, 4. We're still waiting for the 5th touch point there to have any confirmation that this might be a valid pattern. So interesting levels at the moment. And Europe also, yeah, it's much worse. The 2 May low has been greatly exceeded already last Friday. So US stock markets from the current level to the March 2020 low is only 4.5% away. Oh, sorry, that's the March 22 low. If we look at the March 2020 low, then we are looking at roughly 35%. So there's less downward space for Europe already, because it already retraced more there. Europe, I think, is also looking at least a 15 to 20% drop on the coming month. All right, so far stock markets, just looking at some economical data, see if any new with the any new data arrived. This is still the old chart, it's not updated anymore. This is the number that's coming out Friday, the Michigan Consumer Sentiment. The last figure was from March. So you see that in a steady downtrend, and I'm a bit worried what will happen if we close below 55. So I have to see about that. Balance sheet, US still stabilizing. EU stock market destroyed. Government bond yields, this is the 10-year, keep going to historically high levels. And that's a very big sign on the wall of the recession wall. Yeah, it's an ugly white peak on Bitcoin, that's definitely true. Inflation rate, like 8.5, new figures coming Wednesday. Don't expect a huge pullback here. Maybe just a bit to the 8, but it wouldn't surprise me if it jumped up again. The CPI. European balance sheet stabilizing a bit. Dutch stock market, I don't think any of you is interested in that. So just a quick peek on something I'm working on, just a multi-time frame view of several trending indicators. You see that on the weekly, pretty much everything says we're in a downtrend and it's trending. On the 3-day, everything agrees, downtrend trending. On the daily, pretty much everything is in the downtrend and trending. And only at the 4-hour we see the first signs of some sideways movement, potentially, but still downtrend. The 1-hour downtrend, some a bit neutral and a bit sideways. And then we get the more mixed, more sideways indication recently till the 5-minute. So nice quick overview of multi-time frames there. This is something in development to be able to tell lower time frame bots to stop trading, start trading, and only take longs, only take shorts. So, work in progress, but it does already give a nice overview. That's why I'm just dropped it in here. Here, the last line in the sand at 33k is the January low. And we are just going a bit sideways now. You see this Gann line being perfectly, it bounced off here briefly and now it broke, so it is squeezing down to these levels. Currently the market just seems to be waiting for US market open, obviously. It's not looking, yeah, just sideways movement, waiting this morning, waiting for the US to open in a couple of hours. So nothing really to report. We had some divergences, but so far they failed to play out. And in very bullish, very bearish conditions, on some sideways action on a bullish divergence is the most you can expect. For the rest, nothing really. We had on the 4-hour market hyper, the yellow cross, that peak spotted indeed. We had it here, and since then, since that candle confirmed, we went down a solid a solid 6% since that 4-hour yellow cross there. So perfectly spotted by market hyper and on market hyper by peak. On the 1-hour we had it also, I think it was got a bit faster. Now I just have to. Also, the same 5% move was simultaneously on the 1 hour and the 4 hour, but we did have an early warning sign here with that blood diamond, as they call it. It might dump. It is definitely dumping. It will probably go down more. And then we had unbalanced divergence, red, saying, yeah, we're definitely going down the drain. Even though there was a bit of bullish divergence on the 1 hour, it did play out for a very small candle, but still not looking good. And trade time frame, we're still sideways, but still making lower lows and lower lows and lower highs. So it does seem to be just fading down a bit, waiting for US markets to open for the bigger move. Then one of the exceptions that is doing well, we have the United States Oil Fund, and as you see, we broke out in the 5th of May in the pre-market. We backtested the top of this triangle and we are now bouncing up. And let me just move some stuff out of the way. If we take a bit more detailed look to the price action, we do see that it was a very perfect backtest here. It went down pretty much to the top line and now it's looking to back up. And I think once we cross this high here around 82.75, then we will probably see a new high there. So from the previous peak to that previous high is already a 6% move, and then it's, let's see if we break out. Potentials for this are definitely good if we take the weekly pivot here. You see that we made a 50% retrace, and then it went, the next low was around the 382, double bottom there, took off, and now it's going back to that high. So really nice looking. If we were to make some predictions on price targets, we went from here to there with this as the deepest retrace, around there. Target zones are quite wide, obviously. In this way it's a guesstimate, but first target zone is around here, pretty much, yeah, so close to 93 to 100, so might mess around the bottom, go to the top, mess around there, go back to the bottom, but long-term target is all the way here, your 1.414 and your 1.272 extensions. So that would mean 120, obviously that's a rejection point. Very nicely lining up to round numbers. You see this top is at 100, this bottom is 120, pretty much 125. So psychological levels are aligning with these fib extensions. And if we get there, and I've got quite a nice stack on this, if we get to 100, it's a 20%, 22% up from here, and if we even go there, it's a 50%. I have it as a hedge, just the tokenized versions on FTX. Really easy to trade, you can automate it. So definitely one of my, it's outperforming the rest of the market completely. If we just take the correlation with, say, oil stocks, so let's do it with the Dow Jones. you see that correlation is negative already. So it used to be even on 98% correlation in the past in December. Then it went even all the way down to minus 82 correlation, and we're now dropping to negative correlation. And this is a clear sign that this stock can outperform the market, and it probably will. Looking historically, we already are on a parabolic rally, but it could go much higher. If we just look how these zones align in history, perfectly with this this first high and then the higher high candle closes, that aligns really well, those fib extensions. And this zone is also definitely, look at that, perfect. This high here with that high was resistance here, was resistance here, was support there, was support here briefly, support resistance flipping. Here the gaps below it and back over it. So those fib extensions, the way we draw them with the zones, are aligning perfectly with historical price action there. And yeah, this baby has been in 380 zone, so it's not like we're close to an all-time high at all. If we look at the 2008, we don't seem to load. There we go. In the 2008 economical crisis, it was $950. Just bloody imagine having that again. Excuse my language. That is 1,000% up. So I really don't think that will happen again. The world changed quite a bit, but it does show that these are very, very realistic targets, in my opinion. To look at it, that these are very realistic targets, and it's not just order stock moonboying. Perfect. Look at it. So very strong chart. One of the few things that actually outperforming a lot on the market. Had a very nice parabolic start, is now just consolidating sideways in a symmetrical triangle that is trying to break out right at this moment. So if you're looking for a good hedge trade with a very high risk reward ratio, this is the best that I can find, and that is easy to trade for me on FTX. Now if we can just take a look, if we just look at tokenized stocks on FTX, is there MicroStrategy? Ouch. National Gaming, but I think that's pretty much a meme stock that is doing weird things. BioNTech, yeah, obviously with people worried about new COVID waves. Grayscale Bitcoin Trust is actually not doing that bad. Robinhood pretty much zero, but these are a few exceptions, and they're minorly in the green, except for the Penn National Gaming. But for the rest, all the tokenized stocks here are pretty much Friday they really got destroyed. So yeah, I think USD is one of the outperformers in the market that has one of the best charts there. And now I'm just looking, just curious on the Penn National Gaming. Well, that was a bit of a bounce, but it's completely destroyed there. And they say Bitcoin is risky, eh? Take a look at this from March 21. Oops. From March 21 to now, minus 75%. Holy shit. But no, Bitcoin is dangerous. You can lose money there. Yeah, well, try the stock markets. Holy ugliness. Netflix from November to now, minus 75%. That's even worse than crypto. It's like Bitcoin is outperforming Netflix. It's crazy. Another one. What did Zoom do recently? Oil. Like here at that 250 level, it really looked like it would pivot, but it just went south anyway. Thank God for stop losses. And also more 70, almost 77% in the red. So I don't think they can use the volatility and risk argument on crypto anymore, really. So it's just like any other asset class. It can have a bit of volatility downwards, but this is just destroyed. Look at it, we are at February 20 price levels. So obviously this was one of the outperformance of the Cerveza crash, where it just went on a crazy run up, and all those gains are now completely wiped out again. So just imagine buying without a stop loss in these high areas, you will be dead. So what was another one that I thought was really destroyed? Think. Well, can't remember, but there are so many examples here. That's also not looking good. It's less destroyed, obviously, but if we look to November from now, it's 30% down. It was 43, so might be forming a huge triangle shape there that goes all the way to the end of the year. If you're cheeky, you could try play that. There's plenty of upside in that triangle, so it could just shoot up 30% up and then go 20% down again. Could be an interesting one for that. Just quickly looking at Facebook. Oh, that's also ugly after that double top there. Peak loss was 55%, so I do think these ones also have at least 25% more potential. The big ones usually go later. Gartner, that was the one. Gartner is like a very big IT advisory firm. Look at those scam wicks. 30% down. I think there's a lot of downside potential. Look at these candles, come on. Altcoin behavior, really. But you see, we did make a lower low. We do have some harmonics at a critical support zone, so it might get a bit of a bounce, but I think the market they are working in is also getting destroyed, so yeah. What hope is there for them to rise to the occasion? Anyway, enough charts for this morning. Over 45 minutes in. Thanks for watching. Please like and subscribe and comment if you like this content that I push out every week for everyone. And for those of you in the Discord, I see you there, and trade safe and be safe. It's a crazy world out there.